you have to learn that this is a team sport. It's something that, especially when you're getting started, you just don't do it alone. And the leverage is amazing here because like somebody was reaching out to me the other day and said, hey man, I have this problem getting deals. Like, how do I find deals? Well, the answer is welcome to the Stephen Lee Thomas Show, where we provide expert advice for real estate entrepreneurs. And I'm your host, Stephen Lee Thomas. And it wasn't that long ago that I was navigating the challenges of real estate investing, learning from my mistakes, and building the business I have today. I created this show to give you simple, actionable, step-by-step strategies to help you do the same. Each week, we bring you in-depth discussions with industry leaders and professionals who share their knowledge and practical tips. So sit back, take notes, and let's dive into today's episode. All right, welcome back to the Stephen Lee Thomas Capital Podcast. And today, I'm going to be talking to you about why I believe apartment investing is the ultimate path to financial freedom. I want to share with you how it's helped me achieve financial freedom and give you some of the strategies that you can start implementing today and adopting those so you can also achieve the same financial freedom. You know, I get the opportunity to meet with a lot of people from different backgrounds. You know, maybe you're a busy corporate professional, maybe you've done some single family investing, some flips, some wholesaling, maybe you're a high net worth individual. But regardless of where you are getting started, you know, I can tell you apartment investing is a great decision for you. But I get asked this question a lot. What's the fastest way for me to get into a multifamily deal? And the reason why they ask that question is because they have somewhere along the lines, they've learned that going into single family investing, it can be hard. You can spend a lot of time there getting into working these deals. And when you get a deal, most people I know that have single family homes, they actually don't make a ton of money from those deals, at least not from a cash flow perspective. So what happened is people will say, you ask me the questions, will apartment investing help me achieve my financial goals? Is multifamily investing better than single family? How quickly can I grow my wealth if I invest in apartments? What do I really need to focus on and how do I get started? So by the end of this episode, my goal is to answer those questions for you. But real quick, if you don't know about me, my name is Stephen Lee Thomas. I am a multifamily investor. I'm a business coach. I'm an entrepreneur. And also, obviously, if you're listening to this, I am a podcast host as well. Now, my partners and I, we've done a lot of deals, probably going on 12 deals or so. And a lot of those have gone full cycle, not all of them at the moment, but those are all large deals. Those are probably over, you know, most of them are over 100 unit deals, some of them a little bit smaller. And our goal is to help people double, our passive investors is double their investment. Every 5 years is our goal, is 80 to 100% return on investment. And if those people that I'm working with in coaching who get in as general partners, they can either, you know, 2 to 4x that number. So there's a lot of just that right there. There's whether you want to be a passive investor or you're looking to be a general partner or a deal sponsor. Either way, it's a great opportunity to really create that financial wealth. So what I'm going to cover with you today are those things we mentioned at the beginning, how you can actually learn to retire through apartment investing, proven steps to achieve financial freedom. And one of the things I love about doing this is we're actually transforming communities while we're building this wealth. So it's a pretty exciting and rewarding type of business that we get into. So why do I love apartment investing? First and foremost, it's because apartments are valued different than single family homes. If you get a single family home, the most you can sell it for is based on the comps. And I've had this happen to me where my wife and I spent a lot of money fixing up an old house. We went to sell it and the realtor said, hey, this is fantastic. You did a great job here, but you over improved the house a little bit. You're not going to get as much money as you'd like. And I was like, what? And he's like, yeah, well, the comps, he's like, they're not most of the comps in the neighborhood are not as nice as what you've done with this house. So we were limited by the comps. Whereas apartment buildings, you're actually buying and selling a business. So it's based on your net operating income. How efficient can you make that business? That's really how the difference in the valuation there. You also have control over the property value through management and optimization. So along those lines of net operating income, you basically get to decide what the business plan is. It's kind of like pulling levers to decide how are you going to decrease expenses and increase the income to improve the overall value of this property. How quickly do you want to do it? How slowly do you want to do it? Now, there's other factors that come in, some external factors that you don't have quite as much control over, but overall, you just have more control over these. And digging more into that, what are some things you can focus on? That's driving up rents, increasing occupancy, and optimizing expenses. Now, a lot of people that I talk to, the number one thing they say is, I don't have the money to get into this. Well, the good news is it doesn't take nearly as much money as you think. A lot of people, they want to start with a maybe single family, a duplex or a threeplex. But I'm here to tell you, I didn't do that. I did one single family flip. It was not an easy thing to do. Actually, I don't know that I'd call it a flip because we lived in it for a couple of years. Um, but my first deal was a large deal. And the way we were able to do that is we raised capital for that deal. Is we raised other people's money. We got investors to join that deal with us. So you do need to have some money. This is not a no money, no job, no credit type of business to get into. But if you've got a little bit of money set aside and you have the ability to raise capital or you're open to learn how to raise capital from other people, you're actually leveraging other people's money to get into these deals. You get partners, you're leveraging their experience, and you get property management and you're leveraging their time. So we do something called syndication, and syndication is really just a fancy term for using other people's money to buy buildings bigger than you can on your own. And what this does is it enables us to purchase large properties. And so instead of buying a single family home, it would allow you to buy a 20, 30, 40, 50, 60 unit, maybe even over 100 units, because you're pooling resources and you're raising the capital to do it. And what's beautiful about that is then you get professional management to start to come in and manage these properties. So you're not doing it yourself. And I love that idea of not doing it yourself, because when it comes to managing the properties, any of the properties that I own, for the most part, I hop on a call once a week and I see how things are going. There are times when it's busier, times when it's slower, but for the most part, the property management company, we give them the business plan and they are actually focused on executing that for us. The other thing that happens when you get into apartment investing is you get this, what we call economies of scale. So the larger properties are easier and actually cheaper to manage because as you scale up, you get economies of scale. So for example, imagine managing a 60 unit building, just one 60 unit building. That's going to be much simpler than managing 6 duplexes, and that's only 12 units. But you can see the difference right there. Just get one property with more doors under one roof, have one property management company, have one team that's there doing the work, and you're not taking those phone calls of this broke, I need this. You're not trying to fill it up yourself. You have a property management company that manages that for you. And then another one of the benefits here is the financing benefits. The financing is different than single family homes. You're using different loan structures. And oftentimes you can get what's called non-recourse financing. And non-recourse means you limit or have no personal liability. There is such a thing called a bad boy carve out. So as long as you're following the rules, but basically just don't do stupid shit and you're fine. Then if things don't go well with that property, worse, I mean, yeah, you would lose your money, but they're not going to come after you for absolutely everything because it's a non-recourse loan. I will also go on record to say that I think interest rates are much lower than they have been historically. Now, people will argue, oh, they've come back up, but the pandemic led to probably the lowest interest rates there ever were, and I don't think that's healthy for the economy. But if you even look at interest rates now, compared to where they were 20 years ago, 30 years ago, they're actually very low, which means you can secure long-term financing in these deals and you can actually get pretty attractive returns. And you'll find that because multifamily is such a prevalent business, and the banks, they create loans specifically for multifamily. There are multifamily specific loans, and oftentimes we're able to get these loans less expensive than a mortgage for a single family home. I'm going to go back to the leverage portion here. And when you get into these deals, um, you have to learn that this is a team sport. It's something that, especially when you're getting started, you just don't do it alone. And the leverage is amazing here because, like, somebody was reaching out to me the other day and said, "Hey, man, I have this problem getting deals. Like, how do I find deals?" Well, the answer is you leverage brokers for that. The brokers are the ones who are out there finding the deals and they'll bring them to you. You get to leverage property managers, you get to leverage financing experts, you get to leverage insurance brokers, and you get to leverage a team, because what you'll find is there's different roles within these multifamily deals. And so, for example, you might be more focused on raising capital. You might be more focused on the asset management. You might be more focused on underwriting deals. And once you learn to find what your role is, it makes it a lot easier to find the partners that you need for these deals. So that's a mindset shift you need to make. And it's something that was challenging for me, but the sooner you can adopt that mindset of it's a team sport and figure out what your swim lane is and then find those other partners, it's going to make it a much, much, much easier for you. The next thing I want to mention about is there's pretty high returns and we get to make a good impact while we're buying these deals, these apartment complexes. So the way the apartment investing works, when you get a deal, when we do the underwriting, is you have two components. You have cash flow, which is every month people pay rent, and then you pay the expenses, the amount of money that you have left over in your bank account, that is cash flow. And so that can go out in the form of a distribution to you and your investors. Typically, we do those once a quarter. The other thing that happens is when you sell the property, we have what's called a capital gain event. So that would be, I bought a property for $10 million. I added value. It's now worth 14 million. So I sell it. I get to make $4 million off of that deal, plus any cash flow that I had when I owned that deal. And that's what's beautiful about it. So every 5 years, when you look at the cash flow component and the sale of the event, what you'll end up with is average annual returns that are double digit. The stock market averages, I think at best 10%, but I think it's between 8 and 10%. What we're targeting here in our deals, these multifamily deals, is somewhere between 15 and 20% average annualized returns. And that is how you accelerate your wealth. That is how you really start to make a lot of money here. Is it's an alternative investment. Not tons of people do it, but you can really grow your wealth much faster, whether you're a passive investor. So the numbers I give you actually for passive investors, if you're a passive investor, you will get 80 to 100% return on average. Some deals are better, some deals are worse, over the course of 5 years. If you're a general partner, you should expect to 2 to 4x that. So you would get, 200 to 400% return over the course of 5 years. You're doing more of the work, but you can definitely make really good money doing it. And then lastly, I mentioned that you get to transform the communities, you get to improve the quality and resident safety. And I've seen this happen multiple times where you take a property, and I'm not saying go after bad properties that need a lot of work, but you take properties, and the reason why this works is because we do what's called a value add model, and you know that you're going to go in, you're going to renovate units. Maybe the units haven't been cleaned up for 20 years. I say cleaned up, they haven't been renovated. So they've got old appliances, old floors, old fixtures. You clean that up. Maybe you put some fencing around the community. Maybe you put in washers and dryers. Maybe you put in security cameras that are there. But you have the opportunity to go improve the property, and by improving the property, you improve the quality of life for the residents at the property. And that's always a great thing because you're helping out the community at that time. So not only are you creating wealth for yourself, you're creating wealth for passive investors, you're also creating a better community for all the residents that live there. And that's pretty cool. And that's what I love. And that's why I like to call it a feel good business. It's once you start doing that, it's very rewarding. And you'll see as you do it, this all the benefits that come with it. It's not just all about the money. So with that, and the end of this podcast, I truly believe that apartment investing is a proven path to financial freedom. You can break free from that rat race. You can learn to not just invest in the stock market and get a slow burn. You can not just rely on a pension, but you can truly create wealth through apartment investing. Along with that, you get more control, more scalability, and the ability to not have to do single family homes or something of that nature where you're kind of just buying yourself a job. You can scale faster and actually do less work when it comes to apartment investing. And like I said, it's also a feel good business. So thanks for tuning in to today's podcast. In next week's podcast, I'm going to dive in much more into why multifamily investing outperforms single family rentals all day long. It absolutely crushes single family rentals. So thanks for listening, and I'll see you in the next podcast. Thanks for tuning in to the Stephen Lee Thomas Show today. And if you found value in today's episode, then I have a favor to ask you. Please share it with friends, family, and anyone who might benefit from the insights we shared today. Also, don't forget to subscribe and leave a review if you enjoyed the show. And if you aren't already part of our school community, then head on over to school.com/multifamily mastery hub and join today. And again, thanks for tuning in, and I look forward to connecting with you in our school community.